Hello, I am Jason Jean. I have been asked to make a video regarding a certain topic that is definitely kind of confusing to someone who maybe hasn't been involved in the real estate industry. And that is, what are the differences between a mortgage broker, a loan officer, working for a bank, or a mortgage company? So I'm just going to go and cover the 10,000-foot view of all of that stuff. So I'll start by kind of defining what each one is. And a mortgage broker is one who takes and arranges mortgage applications, but does not have any money to be able to lend out. So they go to other institutions and use their money to lend to borrowers. So a mortgage broker does not do any of the underwriting in-house. Underwriting is figuring out whether or not someone actually qualifies for the mortgage. They don't do any closing. They don't do any funding. So when the loan closes, the loan will close in the name of the lender that they use. So a mortgage broker is really a third party. And there are a couple hundred, I would say, of wholesale lenders that use mortgage brokers as a way of them, having their sales force. So that is a mortgage broker. Then on the opposite side, you have a bank. A bank has only its programs to be able to offer to people. But a bank usually would hire their own sales force, their own mortgage loan officers that you might see in the branches. And so the people that work for ABC Bank typically only have ABC Bank products. So obviously the difficulty there is that sometimes the bank may be very conservative and sometimes it may be very aggressive. And so each bank is going to have a different appetite based on environmental concerns and financial goals and concerns. And so, that could be good or bad for the person who's actually trying to do loans because the delivery could be inconsistent. And there may be a lack of products. Maybe they don't have a lot of things. So that's a bank. And so they do all of the funding from deposits that they may have, lines of credit that they may have, borrowing money from other sources. And that's what a bank is. And then you have the third, which is a mortgage company. And a mortgage company is kind of like in between a broker and a bank. So most mortgage companies do not have checking accounts and savings accounts. They don't have CDs. Like all they're doing, they're basically a bank that is built solely for the origination and closing of mortgages. That's their primary business. And so why do they do it that way? The thing with a bank is that when your focus is CDs or home equity lines or business loans or SBA loans or commercial buildings or whatever that business is, it's a wide scope. Mortgages being just one small piece. Mortgages are very, very specific. It is its own business, really, in my opinion, because it is so much more complex than it should be. A CD, not exactly super complex. A mortgage and getting certain types of loans securitized post closing, et cetera. I mean, the process from origination to closing and funding and servicing is pretty great. It involves a lot. And so that's why these companies have been built just to do that. And so, I've worked across all three. I've worked for all three in my career. And I won't say that anyone is better or worse. They're different. Not every place is the best for every person. The reason I work where I work and why I've chosen to be a mortgage lender at a mortgage company is because of the tools and resources that we have. So we have many investors that give us so many different types of programs. They allow us to do a lot of things that are outside the box that traditional banks would never touch. And so what we do is we use what are called warehouse lines. Like we use lines of credit, primarily in addition to cash and whatnot, to fund these mortgages. And then once we close and fund them, we will securitize them with Fannie Mae or Freddie Mac or FHA or VA or insert whichever security you're going to underwrite to. So they give us the guidelines and we have to underwrite to those guidelines. So it does give, like, mortgage lenders have more product. I have way more investors than any one bank is going to have, but we do it all in house. So the investors give us their money and maybe they give us their programs and they let us underwrite the file. So I don't have to rely on a third party to underwrite the file, to close the file. I was a mortgage broker for, I believe, a total of 7 years, maybe. And, the company was amazing. They were wonderful. And I would like to think that it was one of the best brokerages out there. But in the long run, a brokerage is very difficult to operate for a considerable period of time because of the fact that now you're working in a large number of systems. If you have loans at 12 different banks, that's kind of easy for things to get lost. It takes a lot of time to do the work in all those different systems. And, my biggest frustration was lack of control. I couldn't pull my underwriter off and have them review my file because we needed to close it tomorrow. It was like, no, we're in line, and that's just the way it is. Most wholesale lenders, they don't, you got to get in line. There's a customer service aspect to it, but at the end of the day, it's not like having your own people internally who you can say, hey, listen, I need this done right now, and boom, they're done. Now, obviously, there are plenty of mortgage companies out there that aren't great, right? So being able to pull an underwriter off and reassign them and have them do what is necessary to get your closing done tomorrow is not going to happen everywhere. I'm just saying that at the right mortgage companies, that's the type of service you're going to get. So you can really prioritize your business and you can get things done in a timely fashion. And because I've found that the fewer the third parties are involved in any transaction, the faster things will go. All right. Because if I can control what I can control, and that's my limiting factor, I can figure out ways to get faster. If my limiting factor is John over at ABC Title, most of the time there's nothing I can do to get John to work any faster. John is going to be John at the third party. We might try to switch using third parties later down the road, but it's not going to help my deal right now. So what we try to do is just remove as many pieces from our business that could create obstacles down the road. And so that's probably the biggest thing about mortgage lending. The other thing about like interest rates per se is a bank is going to set its own interest rates. So if a bank is conservative and they're just going higher on interest rates, like that's just is what it is. They can't go anywhere else. Whereas we have multiple investors, multiple interest rates, and we can exercise getting the most aggressive competitive interest rate. Same thing with brokers. Brokers definitely have the ability to search around and see who's got the lowest rate. And, that is often important, but I'll tell you as a broker, I learned that interest rate wasn't the most important thing. Because there were plenty of times where I literally had the lowest interest rate on the market. We had a bank That was very, very low. But there's a reason why they're low. It's because of the fact that they don't hire great staff. They don't have fast things happen. Like I could have an 800 credit score, which was like perfect, 50% down, cookie cutter house, easy deal that I couldn't close in 5 or 6 weeks because of the fact that this bank was just so laborious in how things were done. And it was a nightmare. It was a disaster. And I was not making people happy, even if I was able to give them the lowest rate. So we actually stopped using that lender pretty quickly because that was torture. And then we chose to go with places that were a little bit, hired good people, maybe a little bit more expensive, but worth it and going to deliver good service. Good service is something that is just highly overlooked in our industry until you've had bad service. And then once you experience bad service, you go, okay, I get it. A lot of people just expect everything to go smoothly. What could go wrong? It's going to be fine. It's like, no, there's a lot that could go wrong. There's a lot of people who could not call you back and get you the document that you need to close. And so that's what we try to do. We try to like really make everything tight in-house, have complete control over the transaction, have an enormous amount of product. So that way, if someone presents a situation, if it can be done, we can do it. That was one of the reasons why we came over here now, when we looked at the amount of product that they have, especially the NAF Cash product that we have now, and which is turning buyers into cash. That is a ridiculous program. We can also do new construction. So if someone wants to build a home, we have construction loans that are actually really, really solid. So we can do a lot of different things here that a lot of places can't do. And I wouldn't be able to do that at a broker. A broker, you wouldn't want to be able to do that because things are just not set up as well at wholesale lenders from my experience. And then a bank is just going to be good or bad, based on where they're at. So bankers, I would say, when you look at the majority of the mortgage business being done in the country, like if you look at the top 100 loan officers for production in terms of maybe units and or volume, you will see that the large majority of them are at a mortgage company, and that they're not at a bank, and that they're not at a mortgage brokerage. So I would say that, if you're going to use anything as a measuring stick, you could use that. It is a great place to be. It's definitely, from my experience, if you find the right mortgage company, I would never go back to being a broker or a banker again at this stage in my career, where I want to grow and we want our team to grow and we want to keep helping as many people buy homes as possible. So hopefully that helps. If it raises any other questions or comments or anything like that, please reach out and I'd be happy to answer those, and look forward to talking to you soon.